Now imagine if you have that data, like how much more efficient you will be. The quality of your decisions would be so much better. You see investors talk about, oh, I make 7 figures. Sure, great, good for you, but how much do you get to keep? Are you making $1 million in revenue but only have $50,000? Would you rather have that business? Or would you rather have a business where you make $700,000 but you get to keep $350,000, $400,000? I would much rather have that business. Imagine what huge advantage you would have over everybody else that's out there blaming the economy.
Welcome, everybody, to the AJ Osborne podcast. Today's podcast, we do begin talking about real estate and technology, but really this podcast is about entrepreneurship. So we move over, but about halfway through, we really start talking about the things that make entrepreneurs successful and the things that make them fail, and how you can identify that, whether it's building a real estate company, a software company, a product-based company. The conversation is really good. We talk about data, particularly in the real estate space where we start out, but it really moves to overall entrepreneurship and getting through those tough times and what to analyze and look for and the mistakes that they make. So a fabulous podcast on entrepreneurship. I hope you all enjoy it. Welcome, everybody, and today we get to talk about like my favorite subject in the world, which is technology and real estate. So we have Sharad Mehta with us here, and he owns a software company that he built that is like a CRM for real estate. So welcome on, man. I appreciate you taking the time to come in here and talk about this.
Thank you, AJ, for having me. Excited to talk about technology. I love it. Yeah.
Yeah, it's so fascinating because real estate seems like it was really slow, particularly in our industry as well as others, to adapt technology, because that's not how real estate investors think, right? It's just the assets, the hard asset. Now, I'm come from it way more of the business of real estate, not just like a simple investment, and that's how I believe all real estate investors should do. So let's talk about that real quick. Why software in the real estate space? Like what brought you in? Why did you think that there was a need, or what were you seeing?
Yeah, so I flip houses. I've flipped over 750, 800 houses at this point. So in 2015, I was living in Chicago. I moved from Chicago to San Diego area where I live now. I flip houses right outside of Chicago area in Indiana. So once I moved from Chicago to San Diego, I started looking at, the inefficiencies in my business. And the first thing was I didn't have any systems and processes that I could scale from, 4-hour flight away. So I started looking at the software that were available, and I didn't find anything that I felt very good about. There were all these different software that you could sign up for, and then you would have to patch them together through Zapier, APIs, and all these integrations. So you would need one software for your leads, another one to call out of, another one to, for website. I just didn't like the idea. It just seemed like it was going to be a lot of work, and I didn't like anything that kind of fit what I was looking for. So I hired a couple of developers, and I thought, okay, I'm going to have these people just create something for myself, very particular to my need. And once I did that, I was part of a couple of masterminds. So I tried it out for my business for a couple of years. Then I started going to some masterminds, and we would do these hot seat presentations talking about our business. So I started sharing some numbers, started sharing some screenshots from the software on kind of what I was doing, giving an insight in my business. And then people started getting interested, like, hey, what software are you using? Can I try it out? And that's kind of where we scaled from.
So when you're building it out, what exactly was it doing, or what did you need it to do to really help you?
So there were 3 things. It first had to be an all-in-one software. So there's different parts of real estate. You need to get data, manage your data, need to do marketing, and then you do sales and then operations. So we needed something that where you could run all these different parts in one software. I didn't want to go into different software to manage my data, and then another one to manage my leads, another one to manage my sales team, and another one to manage my bookkeeping and my buyers and whatnot. So that was one thing. It had to be an all-in-one software. The second was it had to be super simple to use. The third was it had to give really good KPIs, data. So I come from an accounting background. I used to be a full-time accountant. So when I moved from Chicago to San Diego area, one thing was I wanted to make decisions in my business based on numbers, not based on someone's gut feeling or opinion of how the business was going. So those were the three criteria we had for the software. All in one, super simple to use, and I had to give really good KPIs.
Okay, I like that. So there's a few things that I think a lot of times when people think about technology, they think of complexity. And that tends to be something that is a sticking point for a lot of people, and especially in real estate investing, where a lot of people go into it, to be frank, because it's simpler than starting a real company. And I fundamentally disagree with this. I think if you are a real estate investor and you're an active investor, you are a business owner. So if you're an active real estate investor, you're running a business. Now, if you're a passive one where you gave somebody money, of course, that's different. You're passive. But a lot of these active investors, they don't seem to know the difference. They treat it as if it's still their passive investing. And this is a major flaw. And so I think a lot of times that when people think about technology, they don't really understand how it fits because they're not looking at it like a business. Now, the idea of centralizing your data, having meaningful KPIs, for me, though, it also allows you to utilize and draw connections and trends. It allows you to have insight into your business, to optimize it, to run it better. Whereas what you're saying, like everything's fragmented apart. If you have all different silos, you don't see the connectivity between silos. You don't see the relationships, right? And how one change affects another. This compartmentalizes your business then. This also compartmentalizes increasing cost. This also leaves money on the table, opportunity, and it makes it basically impossible to scale. And I think a lot of people, when they think of the technology, I'm not sure, it's just a buzzword, right? They think of complexity, where actually it should be the opposite. Technology is meant to simplify.
100%.
It's what you're simplifying, right? That's the question, and how you're going about it and how you're doing it. So what do you think is the thing that most real estate investors, they miss out on with their business? Like, what are they not looking at that they should be? What are the things that they're missing that are fundamental to really be successful?
I think it's the KPI. So when you think about real estate investors in residential niche, right? You have investors that are flipping houses, that are wholesaling. It's essentially a marketing business that they're doing. 1/3 of their revenue for a typical investor goes towards marketing. So if you can optimize your marketing, if you can be efficient with it, you have a huge advantage over anybody else. So not looking at your data is the biggest opportunity investors have. For example, you have investors that are doing direct mail, that are doing PPC, that are doing, TV ads, radio ads. Now, imagine if you have these investors spending, let's say, $100,000 in all these marketing channels combined, and they make $500,000. They're like, this is great. I spent $100,000, made $500 for every dollar that I put in. I made 5x. Sounds great. That's like absolutely basic fundamental thing you need to look at. But then the question is, okay, you're doing TV ads, you're doing radio ads, you're doing direct mail, you're doing PPC. And let's just say, for this example, you spend $25,000 between these 4 marketing channels. Now, the question is, you made $500,000. Did you make it from direct mail? Did you make it from TV, radio, or PPC? Once you start looking into your numbers, you might find out that out of this 500,000, you made 400 just from direct mail. So on that 25,000, you actually made 400,000. And the other 75,000 that you spent in other 3, you only made 100,000. So now imagine if you can just cut out the 75 from your business. So you lose 100,000 in revenue, but you cut out 25. So it's not just your 75,000 went down. Now you need less employees. Now you have a more efficient business, leaner business, much more profitable business. Now you can, if you just want to stay at that level, you can only spend 25,000, continue making 400,000. If you want to scale, then you want to put more money into that direct mail because you're making significantly more from direct mail than other marketing channels. Now you can go a level deeper. Let's say if you're doing direct mail, typically you're not mailing to one list. You're mailing a couple of different lists, right? Let's say for this example, you're mailing to 2 lists. you're spending 12,500 each. And it turns out when you dig a little bit more, you're making out of that 400,000, you're making 300,000 from that one list that you're spending 12,500 on. Now imagine if you have that data, like how much more efficient you will be. The quality of your decisions would be so much better. Now, if you're going into another market, right, you have this data that you've proven in your market. Now you don't have to guess into another market and say, hey, let's do direct mail, TV, radio, PPC. Like, no, I'm going to go into another market and I'm going to take the budget that I have 12,500 for this list one. I'm going to put that in the new market and see if I can replicate my numbers. Imagine if you can do that. Like, what an amazing business you have. I think that's the one piece that you see investors talk about. Oh, I make 7 figures. Sure, great, good for you. But how much do you get to keep? Are you making $1 million in revenue, but only have $50,000? Would you rather have that business? Or would you rather have a business where you make 700,000, but you get to keep 350, 400? I would much rather have that business. It's less headache. So typically the biggest opportunity investors have is, first thing, if they're not doing that, is to be efficient with your marketing. That's number one. Second would be your payroll. More than 50%, to be conservative, of your revenue will go towards marketing and payroll. Depending on, if you are paying yourself a salary or not. If you're not, then you should still factor out. You should still take out from your numbers that how much you would owe if you were to replace yourself. So if you look at that, if you can gain efficiency in those two, marketing and payroll, like you're going to have such a profitable business. And just for some quick references, if you're making less than 3x on your marketing, then either you're spending money on wrong marketing channels or you are not very good with converting leads into deals. And then on your net profit side, anything less than 30%, meaning you are either spending too much on marketing or too much on payroll. Either you have too many people on payroll or you're paying them too much.
Or they're not being effective.
Yeah, exactly. They're not being effective.
Yeah. One of the big things we look at is the actual conversion rates. We're looking at the individuals. We track it. But once again, if you don't know that, there's nothing you can do about it. So like right. you may have somebody that's conversion rate is 3 times as high as another one. Well, then you should ask, what are they doing that the other one's not? And if you could apply that over, this is a leverage point on your business. When we look at it, we're getting the leads, where are the leads coming from? How are we converting them? What is the overall opportunity of those leads? So quality of leads now and how those are coming in. Each one of these line items kind of that you're talking about, that is a leverage point in your business that is huge.
100%. Yeah. I could not agree with you more. You start out with how much money you're putting into your business, how much it's coming out. You start with that. Like marketing is the easiest one to look at. Total marketing spend, how much revenue is coming in, then you work backwards from there. Start digging more into it. And then, like you said, if you have multiple people on your team, look at how each of them is converting. If one person is converting 3 times better than the other, look at what is that person doing. Are the quality of leads different or the sales pitch different? And then just replicate what's working. Just keep doing more and more and more of what's working in your business and cut out what's not working. It's very simple in theory, but it only happens once you start looking at the numbers. So that's where I feel like real estate investors, they're action junkies, right? They love making the deals. They love doing deals. That's great. But the money is in the boring stuff, mundane stuff in the business. Looking at numbers and keep improving day in, day out. Keep getting better at something day in, day out. Like don't get excited about, you want to keep doing deals, but those deals need to make you maximum profit possible on every single deal that you're doing.
You're limited on time.
Yeah.
This is an absolute limit that you have. Other things we can expand. We can actually expand our markets, so we can expand our viable opportunities. We can expand our capital, right? You can go get investors, right? We can expand all of these other parts, but your time you cannot. So in order to really leverage it, it really is about this quality. And two, not only quality, but it's about most of the time, there's this tail end. So you're putting money in and you're not seeing what comes out for a long time. And I see investors, they get in trouble. The market will shift on them. They're not being aware of their numbers. And all of a sudden the outputs aren't equaling their inputs. And they're figuring out months later, they're running at losses.
Right.
And they didn't even know it. And it was only until they realized, why is my bank account draining? And it's like, well, if you were paying attention to the numbers, you would have seen that and you could have shifted a strategy because there is a tail end, right, to that real estate. So these are metrics that actually not just leverage opportunity, but they keep you from failing. I see this all the time, that the markets change and individuals cannot adapt fast enough. They can't change their model fast enough. And it's because they're not looking at those individual data points as seeing how they're changing along the way.
Yeah, 100%. It's like, if you put it in different contexts, if you weigh 300 pounds and your goal is to get to 200 pounds, you're going to go to gym, eat healthy. Those are the two levers you can pull. But then you need to look at your weight day in, day out, or like every week, every month, right? If you go, after a month, you go from 300 to 310 pounds, you went in the wrong direction. Then you need to ask, okay, yes, you're going to the gym, but are you doing the right thing at the gym? Are you just checking off, hey, I went to the gym, but you're just sitting there and watching TV? Right? That's only happens if you look at your numbers, right? You set your goal. Okay, I want to go from, $100,000 in revenue to 200,000. Then you look at weekly, monthly, and see if you're going in the right direction. If you're trending in the right direction. Some months, some weeks may be better than the others, but if you have more good weeks, more good days than bad days, then you're going in the right direction. And that only happens if you look at the numbers in your business. Like, numbers never lie. People will make up stories. People will say, oh, this happened, that happened. Great. Let's look at the numbers to prove that, right? If someone says, hey, summer is slow month. Yeah, let's look at last summer. Was it slow last year? Did we get less leads? Do we have the same number of leads? Like, why are we not doing the same business?
Yeah, I'm shocked how many people can't identify why their business is going wrong. And then they'll just blanket it. It's the market.
Is it? Yeah.
Yeah, is it? That may not be true. In fact, the market may have shifted in your favor, but because you needed to change and you didn't, you're actually underperforming while others are outperforming, but you didn't even understand or know. And so all of a sudden, what worked for them in a certain season, they just kept doing it, but conditions are always changing and they weren't aware, they couldn't adapt. Right. And so then they just blanket things on out of control things, or things that are outside of their control, which then means they don't have to look, they don't have to understand, and they don't have to change. So it's just this blanket thing where the market turned on me. And did it? Really? Did it? And two, even if it did that mean that this output was guaranteed? And I don't agree with that. I think it's opposite. We track I'll track my individuals on the operation side. I'm looking at my individual assets. We're looking at our total revenue. And so a lot of people will say, oh, rates and occupancy, which obviously we look at that, but then I look at my my actual revenue and we can adjust things. So we may be in a market where occupancy and rates are going down, but I'm actually getting my revenue up because we're playing with in-place rents instead of out-place rents. And I can show that. I can show market rates went down 20%, but our revenue still went up 12%, even though our street rates may have gone down and our occupancy may be lower. But then we're changing the way the inside of the business works. So all of a sudden, we can make ourselves so we're not nearly as correlated with the overall market. If I can't track that, though, and if I don't have a way to look at the relationship between occupancy, rents, line items, and revenue, between all of these things, I cannot figure out how to adjust it so I am not susceptible to simply market changes. And I think that's the difference between a good investor and a great investor. One is riding the market and the other one is performing, or they are operating regardless of the market.
And then imagine what a huge advantage you would have over majority of the investors are going to do exactly what you said, right? They're just going to blame the market. They're going to blame macroeconomy, right? They're going to blame external
interest rates or whatever it is.
Yeah, whatever. But if you can be in minority and take responsibility, say, I'm going to look at my numbers and see where is the opportunity. Imagine what a huge advantage you would have over everybody else that's out there blaming the economy.
Yes.
Right? If you double down on things that are working, if you know what's working and you just double down on it, you're just doing way better than any other investor out there. And the only way to do that is look at your numbers. Like, know what's working, know what's not working, and just double down on what's working. It's just, in theory, it sounds so simple. Just do more of what's working and do less of what's not working. That's it.
I have a saying that inputs equal outputs. I'm like, if that's the only thing you did in life was look at the inputs to the outputs, and if you want to change outputs, just change inputs. Yeah. Simple, really simple. That is very hard, and lots of people don't think like that. But the point is, those inputs, I'm saying you change, you control, not allowing others. But most people don't do the most basic thing. Look at the inputs and figure out the relationship to the outputs so they have something that they can change. And real estate investors are notorious for this because the idea of real estate, you buy it and it'll be worth more in 10 years. They go, okay, well, that's not something I do. That's just because the market does it. So I'm just going to buy. And if it doesn't work out, it's because the market. It's like they disconnect themselves to the responsibility of the inputs. And that drives me bonkers because I'm like, you're running a business, not this. But it seems simple, but it's not. It's a fundamental way of changing your mind. And not only changing your mind, but then your day-to-day actions, meaning that I now have to identify what inputs matter. I have to identify the correlation. So what happens to what? I can only do that if I'm taking data, tracking data, and then analyzing it. And two, lots of times over a longer period of time. Then I have to understand what's happening. And then I have to test. What can I change on the inputs and what goes up or what goes down? So it's not just about knowing, but then it's tracking, analyzing, understanding, and then testing and changing the inputs in the right way. Yep. And so it's way more work. But at the same time, I don't understand. I'm like, well, what else are you supposed to be doing? I don't what? I don't get it. So you just fail, or you can't explain how you made your money. That's it. Just if I ask somebody how to make it, it's all about the right market, right? That to me is the biggest red flag in the world. Yeah. Because it means they can't accurately articulate what drove the value for those properties, or they may be right. The point is, though, that is their strategy. It's just, and they're not in control of that. So for me, I'm like, that's scary to me because your strategy is dependent on something you cannot control. So if I gave you money or if you're investing, it is purely based upon a non-controllable that you're rolling the dice on. And I'm like, that's not a business, right? That's gambling. Okay. And without the data, that's what you're doing.
Yeah, 100%. Yeah, I need to start with as an investor, you need to start with like a basic North Star metric that you're tracking, right? It could be a net profit. All right, I want to make whatever my revenue is. If you're below 30%, set the goal of I want to make 30%. Then look at all the expenses that you have on your P&L. How can you, either you cut them out or how can you, the income generating revenues that you have, which is the marketing and payroll, how can you make more money from that? And just look at it, like just keep digging, like start with like ROI on your marketing. That's such a basic thing. And it just drives me crazy that investors don't even track that. They don't even look at that. They just think, I'm making good money. But yeah, you're making good money, but you could be making a lot more money. If you're making, X per hour, you could be making 2X or 3X per hour again, you could just increase your output exponentially with the same input. Just doing a little bit more work, just knowing what the right levers you need to pull, you could be making so much more money.
And if you don't know how the money comes to you, then you are not in control of it and you don't know when it'll go away. Yeah. And this is the most important thing for me. I'm like, if you can't identify how the success is coming, that means you cannot control future success and you don't know that it'll ever keep coming. So you're basically writing things. And this is, real estate investors are notoriously washed out by markets. This is why. So for somebody that wants to have longevity in the overall real estate market, I'm talking operations. So you may be acquisition. Now we got acquisition of individual products or properties. You have acquisition of investors. You have acquisition of tenants, right? So you have a whole funnel built out for different aspects of the business that you need to go through, acquire, measure, analyze. Then you also have on the operations side, right? You have all of these other inputs and maintenance and things that you need to be doing and analyzing. But generally speaking, right, they're not diving into that. I think you're right. Deal junkies, we expect to just make it, deal's good enough and we're going to make it. And in times like this, that's starting to change. So in higher interest, when things get harder, people start to ask why. And really that comes down to, for me, the question and what technology is supposed to do. It is to answer that question. Why? Good or bad? Why? Yeah. And if you can explain that, you can improve it, fix it, hedge against downside. Now, talk to me about, though, building out a tech company, a software system, right? Like, Talk to me about that journey here. You're like, okay, I see this problem. I need this fixed. You just simply did you go to Upwork and hire a developer? Did you develop it yourself? Did you say, I'm going to test this? I'm going to figure this out? Like, how'd that go? How'd you do that?
Yeah, so I hired developers initially from Upwork. And yeah, it didn't go kind of how I had planned. I hired these developers from Upwork, gave them the requirements, and I'm like, okay, just, come back to me when it's ready. 6 months later, they come back to me with something. I'm like, this is nowhere close to what I wanted. So in my mind, I don't come from tech background. I come from business background. In my mind, I just thought, all right, I give someone what I need. They'll understand it. And they'll just come back with the finished product. But it didn't work like that. It was definitely, say, it always takes twice as long, twice as much money, if not more. That was 100% the case. It takes so much more money than you initially thought. It takes so much longer than you initially thought. Like your expenses go up. It's very challenging. It's very challenging, but very rewarding at the same time. Once you get it to the point where people are using it and seeing value from something that you and your team created, it's very, very satisfying feeling. You're helping people make more money. But it was very challenging. I mean, hiring people, knowing, not coming from tech background, okay, like who to hire, they would ask question, okay, what programming language do you want? I'm like, I have no idea. Like, shouldn't you be telling me this?
Yeah.
So like those sort of things. And then like initially we thought the developers are going to create something. Okay, I'll see kind of, it looks right. It does and then you ship it out, but you don't realize you need to do QA testing on it. This is like, we're talking very, very early. Things are, breaking. And then we started thinking, okay, we need to have someone before we ship it out. We need to have someone test it. And then, then we have iOS app, Android app. It just keeps adding more and more layers of complexity. Then you need like a QA team to make sure they test it. They give us their approval, and there needs to be healthy tension between developers and QA team. So it's been very, very interesting journey. But if someone had told me all the effort that was going to go in, how much money it was going to take, how long it was going to take, I would have like, oh, wow, that sounds like a lot of work. I think I was so naive. I was just so ignorant about it. I just thought it would be super simple.
Classic entrepreneurship. I say this all the time. If the entrepreneurs end up knowing what it's going to take, they would never do it.
Yeah.
Especially when you're starting out of a need and a thing and you don't understand it. So this naivete is actually really helpful in entrepreneurship because the struggle is so much and the time and the cost and everything else. But that's also why it's good and worth it and why entrepreneurs do well, is because then they have something that is hard to do and make. But it is not easy. And software too, for some reason, I think people think software is easy. Hire a developer up on Upwork, say, oh, build this, and they just whip it out. That is not true at all. No. That's, we've all been there. I've been there, right? Same thing. I'm like, oh yeah, I'll just, no, holy cow. I mean, we have, our software company, we're talking years, and one platform is, $30 million, and a huge platform for the industry, everything else. Then we have other ones where I'm like, oh yeah, I should have had this software system all built out and done in 3 months, and we're now 8 months, right? And we're trying to get our MVP out. It's that process. It's how that works because of the different complexities. But there's also then you have everything from users, and you need to bring those in. It takes time to bring a product to the market, and especially when you're dealing with technology, because there's so many ways and things that can go that you don't even know until you get started. It's like you can't uncover it, right?
Yeah, you cannot. And then you put something out there that you feel, oh, this is going to be an absolute home run. And you get pushed back on, oh, why did you do this? Like just this past weekend, we made a simple change where our activity was sorted where you had the most recent messages on top and the oldest one at bottom. And it should have always been the opposite, right? If you have a text box at the bottom, then you would expect to see the most recent activity at the bottom close to the text box. And we always had it opposite. It's just kind of how we built it. And we switched it over the weekend to make it like kind of align with all the other applications out there. And we shipped some other big updates out there. And it was amazing how much pushback we got on this update that we made, which was like to be aligned with all the other, applications out there, like even your text messaging. It always shows the most recent one at the bottom. So that's what we did. And we thought people were like, oh, thank God you finally did it. And I'm like, no, why did you do that? Can you go back to the old one? And like some of the things that you least expect you would get pushback on, you get pushback on that. So the simplest things that you push out, you're like, oh, nobody's even going to notice. And like people absolutely love that. Yeah. So it's important to always be in tune with what people want. Like just always ask for the feedback and see the things that you're working on. Do they add value at the end of the day?
Yeah, I'm a huge believer in just get the product in people's hands as quick as possible because you are going to build to them. Like people that spend all this time and money and capital, they build this huge thing and then they put it out to the market and the market's like, I don't really like that. I don't want it, right? Lots of times that could be avoided if you would have started at the fundamentals, the basics, and build off it, because then you're building to the users. That's all you're doing. You're trying to build to users. But software's application especially is sensitive to this. It's not like it's just a product. It's an application-based thing. That means the customer, your target customer, is applying that in business, in life, in everything else, and how they utilize it and apply it will dictate the value that they get from it and also what they want. So it's a multi-tiered user system. So you give it to them, they apply, they use, they figure out what they want, what they like, what they don't want, and then you have to build it out for that overall user base. You're trying to hit 80% of the needs, but also then how they use it, the application of it. So software is very complex in that way, is that what you think once applied for users may not go at all what you thought they would want or need, and you have to adjust.
Yeah, that's so true. Yeah, we ship something out and in our mind, we think, okay, this is the use case for it, and people use it for totally different purpose from which they get a tons of value. And like, oh, I didn't even think about that people would actually use this feature that was built for this specific use case, but they're using it for totally something different and getting tons of value out of it. So every time it's amazing how genius some people are on how they use the software, like a product that you build out for a specific reason, how they use it, how they get value out of it. But yeah, I mean, always getting feedback from your customers in just any business, not just software, any business,
any
like
business.
What people like, what they don't like, and then asking them, hey, if I build this, if I create this product, will you pay for it? I mean, that's the ultimate question at the end of the day. You might think something, it's amazing, but would people have any willingness to pay for it? If the answer is no, I mean, you might think it's amazing, but if people don't think it's worth paying for, then why would you create it? At the end of the day, I mean, you may just give it for free, just make it as a feature part of one of the plans that you have, but you still need to ask this question, would our customers pay for this thing that I'm building? Is it worth putting time and effort into it? Is it making their life, is it adding more value to them at the end of the day? Do they see value in this? If not, then who are you creating this for?
Well, and this comes back down to this whole idea of data. In order to be successful, you have to optimize change. You have to, if I don't have that information, I can't do it, and I can't be successful. So in order to build a business, I don't care if it's real estate or any other ones, you have to be taking in the customers, everything else. You have to be adapting towards their needs because you're serving a market. That's all you're doing. If I don't have the data, if I do not have it, the longer those feedback loops are for you to identify, analyze, and correct, the bigger those feedback loops are, the longer they take, you lose the customers and your business fails. You have to get very quick at closing feedback loops, identify, analyze, fix, build, deploy, and over and over and over again. You can't do that if you're not taking in data. And I think real estate investors think that they are not affected by those things like other businesses are, and that's simply not true.
And it affects pretty much any area in your life, right? Even in our business, like we have CS team. So we want to get that, exactly to your point. We want to get quick feedback loop, right? So every week a survey goes out to our CS team because they're the one at the end of the day, they're the heart and soul of the business, because there's the one who talking to our customers, right? Every week a survey goes out where they fill out on a scale of 1 to 10, how would they rate their experience working at our company? Anything less than 10, we want to know why. Like, what can we do to make it a 10? And there's some amazing feedback that comes out of it. We just something as simple as people saying, hey, I'm on calls all day. I would love it if I have like half hour at the beginning, half hour at the end, just to like kind of do the admin work rather than going from calls to calls. I'm like, oh, wow, this is great. But it only happens, and it just makes such a huge impact in the quality of work that they're doing, like how satisfied that they feel with being part of the team. And you could just apply that to any part of the business, right? If you're putting some, like you mentioned earlier, if you're putting some input, what does the output look like? Does your input match the output, right?
Yes.
So yeah, it's very important. Just the smaller you have that feedback loop, the better. So you can immediately make the changes.
Yep. It comes down to like failing small, right?
Yeah.
And we need to take little hits, optimize, and do better so you win on the big stuff because you have been failing and correcting on the small stuff. And this makes a ginormous difference. The smaller and the more amount of data you have, the quicker those feedback loops can be and the smaller risks you have to take. If you don't, you're getting lumps and not a lot of data. You're taking big risks and you're going to fail big because you couldn't identify the in-between. One of the easiest ways to fail is just you take too big of risks, you leap without the feedback and without the input and the data to make those kind of decisions and iterate. And I feel like a lot of people view entrepreneurship that way. We're gambling. We're we're going to build this thing and throw it to the market. And if it wasn't successful with the market, well, that's entrepreneurship, right? And I'm like, no, I don't think that's it. Why would it be like that if the people that you're trying to serve right there are there and they can simply tell you? Why gamble on that, right? Like you can just ask, you can see.
Yeah, sometimes people fall too much in love with an idea, which they think is brilliant. But at the end of the day, if you're serving someone, just ask them, right? I mean, if you're starting a restaurant, you absolutely love your mother's recipe about something and you think, man, this is like golden opportunity. Great. You absolutely love that food, but just go have other people taste it and ask them, hey, would you pay for this? If it was served at a restaurant. Just
entrepreneurship isn't about you. It's about the people that are paying. And lots of times we get tricked into what we think. Recipe is a perfect example. Like you love it, but you love it because you have an emotional connection to the memories of your mother making it than you eating it and feeling good. If those other people don't have those inputs, they go, that's fine. I guess it may not be good or bad, but I'm not paying a premium or I'm not even going to pay for it. And then you're confused on why. That's the problem. It's not about you. It's about them.
Right.
And that's a big deal. So let me ask you here, if you could tell anybody that's starting a business, real estate, anything else, what is the top 3 things that they should be doing, looking at in order to move the odds into success for them?
I think be very clear about why you're starting something. If you're starting something just for money, it's never the right thing to do. If your pure motivation is to make money, it should be to add value. Because if you think from the point of add value, then the decisions that you make on a day-to-day basis will be totally different versus if you think from the point of view of, hey, I want to make money. Yes, you want to make money at the end of the day, but you want to make money by giving out value and then you want to capture value. So that would be the first thing. Second would be, if you think you have a brilliant idea, before you create the product, like in the example of restaurant, before you think it's a great recipe, great. It might be. Before you go out, sign a lease, and start a restaurant, just have other people taste it. It's just something simple. Or if it comes to software, if you have an idea of something, before you hire developers, do all of this, unless it's something it's for you, that you need it. But if you have an idea, go ask people, hey, would you pay for this, right? If I created this. And if all of them say yes, then ask them, okay, we would be charging $100 for this when we go live. Would you be willing to put $10 now? You get it at a discount. Let's see if people are actually going to put money on that. And then the third would be, once you are clear on those things, then just focus on your day-to-day input. You know where you need to go. Just focus on your input. Like, what do you need to do today to get you to that point? Don't worry. I mean, some days are going to be better than others, but you want to make sure you have more good days than bad days. Don't get discouraged by bad days. Just look at the progress that you're making. If you had a goal to get to certain revenue or whatever that might be, let's say by the end of the year, and you don't get there, but are you trending in the right direction? Again, going back to the example of you want to lose 300 pounds to 200 pounds in 6 months, but you only got to 250, right? You didn't get to 200, you wanted to get to 200, you got to 250, but you're trending in the right direction. Your input is getting you towards the output. Then see if you can tweak your input to get there faster, right? So those would be the things I would look at.
Awesome. I love that. With that, where can people go to find out more about you? We could talk about technology and entrepreneurship all day, but where can people go to learn more about you and from you? Where should we send people?
I'm not on any social media, or I'm not active on any social media. The best would be my email, Sharad, SHARAD at REsimpli.com, REsimpli.com.
Wonderful. Thank you so much for your time. I appreciate your insight. This was fabulous insight across the board on everything. And we wish you the best of luck as you keep taking in those inputs and changing your outputs, man.
Thank you, AJ. Thank you for having me.
Absolutely. Have a good one.
Thank you. Bye.